Let's be real. For years, XRP has been one of the most controversial coins in the crypto space. Some people called it centralized, others said it was dead after the SEC lawsuit, and plenty of investors just tuned out because it wasn't as flashy as Bitcoin or Ethereum. But fast forward to 2025, and the story has completely changed. XRP isn't just hanging on, it's thriving. We're seeing major institutions line up behind it, the ETF conversation is heating up, Ripple's own RWAs stablecoin is taking off, and suddenly what was once dismissed as the banker's coin is looking more like a serious contender in the next wave of crypto adoption. Now, here's the thing. In the crypto world, narratives change fast. Just a couple of years ago, nobody thought Bitcoin ETFs would ever get approved. Fast forward to today, and Bitcoin ETFs are not only approved, they've become one of the most successful ETF launches in financial history, pulling in billions of dollars in inflows. Ethereum followed, and now the buzz is shifting. What's next? Could XRP be on deck? And it's not just speculation anymore. As of this year, 11 different firms, including names tied to Wall Street, have either filed for or expressed serious interest in an XRP ETF. That's a complete 180 from the days when XRP was fighting for its life in court against the SEC. But here's where it gets even more interesting. Unlike Bitcoin, which is primarily seen as digital gold, and Ethereum, which powers decentralized finance and smart contracts, XRP was designed for one thing from the very beginning: moving value across borders, fast and cheap. And with the rise of stablecoins and the demand for instant settlement, XRP's original purpose is suddenly more relevant than ever. Think about this. In a world where money moves slower than information, where it can take days to send funds across borders, Ripple built a system that settles in seconds and costs less than a penny. Banks, payment companies, and even governments are starting to notice. And in 2025, the conversation is shifting from "is XRP alive?" to "how big could it get?" Crypto isn't just about speculation anymore. It's about real-world adoption. BlackRock is investing. PayPal has launched its own stablecoin. Ripple is positioning itself right alongside them, except it has something those other players don't: a native asset, XRP, built for payments at scale. And that's why XRP is suddenly back in the headlines in 2025. Not just because of price predictions or hype, but because the fundamentals are stronger than ever. ETFs are on the table. Ripple's RWAs stablecoin is already handling hundreds of millions in volume. Banks in Asia, the Middle East, and Latin America are testing XRP-based settlement. And US politics under Trump are creating the most crypto-friendly regulatory environment we've ever seen. This is no longer the XRP of 2019 or even 2021. This is XRP entering a new phase, one where it has the chance to compete head-to-head with giants. And that's exactly what we're going to break down in this deep dive. Over the next sections, we're going to explore why the ETF wave could be XRP's biggest catalyst yet, the unique role XRP plays as a bridge asset, how Ripple's RWAs stablecoin is flying under the radar, but quietly becoming one of the most important launches of the year, how all of this could impact XRP's price in the next cycle, and most importantly, why some of the biggest critics of XRP are now changing their minds. But before we get into it, let me just say this. If you're serious about following crypto, not just the hype coins, not just the noise, but the real projects making moves with institutions, banks, and governments, then you're in the right place. So hit that subscribe button, give this video a like, and turn on notifications so you don't miss any of our deep dives. This is going to be a long one, but by the end, you'll see why XRP isn't just surviving. It's staging one of the greatest comebacks in crypto history. If there's one thing the crypto world learned in the last 2 years, it's this: ETFs change everything. When the first Bitcoin ETFs were approved in January 2024, many analysts expected a decent response. Maybe a few billion in inflows, maybe some extra liquidity. What nobody fully anticipated was just how big it would get. Within the first 3 months, Bitcoin ETFs had pulled in over $15 billion in assets, rivaling gold ETFs during their early years. By mid-2025, that number has more than doubled. Now here's the important part. It didn't just push up Bitcoin's price. It also fundamentally changed the way traditional investors view crypto. Suddenly, pension funds, hedge funds, and even conservative retirement accounts had a way to buy Bitcoin without dealing with wallets, exchanges, or private keys. And once that floodgate opened, the next logical question was, what about the other top cryptos? Ethereum followed, and the market responded. Ethereum didn't have to wait long. By mid-2024, Ethereum ETFs were given the green light. This was huge because Ethereum is more than just an asset, it's the backbone of decentralized finance and NFTs. With the ETF approval, money managers could finally justify exposure to ETH in the same way they did with Bitcoin. The result? Billions more flowed in, and suddenly Ethereum's institutional profile was elevated to a level it had never reached before. But here's where it gets interesting for XRP. Once Bitcoin and Ethereum got their ETFs, conversations started swirling. Which asset is next? Cardano? Solana? Maybe even smaller cap tokens like Avalanche? Yet the one name that keeps resurfacing in analyst reports, banking circles, and crypto think pieces is XRP. Why XRP is different? To understand why XRP is in a unique position, we need to step back. Bitcoin ETFs work because Bitcoin is digital gold, an investment asset. Ethereum ETFs work because Ethereum is digital oil, powering an ecosystem. But XRP is designed as a utility token for global payments. That's a very different value proposition. It's not just about speculation, it's about moving real money in real time. And for institutional investors, that matters. Imagine a fund manager at BlackRock. He's not just looking at charts or hype. He's asking what asset has staying power, which asset solves a real problem, which asset is most likely to be adopted by banks, governments, and enterprises in the next 5 to 10 years. That's where XRP shines. The ETF filings, yes, they're real. And this isn't just theoretical. In 2025, at least 11 firms have either filed for or expressed interest in creating an XRP ETF. These aren't small-time players either. Names tied to Wall Street, asset managers with billions under management, are eyeing XRP as the next big ETF candidate. Just last month, Bloomberg reported that multiple issuers have had informal discussions with the SEC about an XRP product. Now that Ripple's case is largely resolved and the regulatory environment under the Trump administration has shifted to pro-crypto, this would have been unthinkable just 2 years ago, when XRP was still battling the SEC in court. Back then, exchanges were delisting XRP left and right. Today, they're preparing for the possibility of institutional ETFs. Why institutions would care about XRP? Here's the kicker. An XRP ETF doesn't just give investors exposure to price movement. It also exposes them to the growth of Ripple's real-world adoption. Think about it. Every time a bank uses XRP to settle cross-border payments, that's validation. Every time a fintech integrates Rust, that's adoption. Every time regulators greenlight Ripple to expand, that's momentum. And institutions love momentum. They want to own assets tied to real-world use cases, not just meme coins that rise and fall overnight. XRP, thanks to Ripple's partnerships and payment focus, fits that bill. So when we talk about XRP in 2025, we're not just talking about price charts or speculative hype. We're talking about mainstream adoption at the institutional level. The Bitcoin and Ethereum ETFs were the first dominoes, but if XRP is next, the landscape of crypto investing will change again. In fact, it sets the stage for something even bigger. XRP's original purpose as a bridge asset for global money movement. And that's exactly what we'll break down in the next section. Why XRP isn't just another coin, but the glue that could hold the future of cross-border payments together. XRP as a bridge asset, the glue of global finance. When most people hear the word cryptocurrency, they think of price charts, trading, and speculation. But XRP was never designed just to be another investment coin. From day one, Ripple set out with a different mission, to make money move as easily as information does on the internet. That's not just a catchy slogan. It's the foundation of why XRP could play a unique role in global finance, and why 2025 is the year it's finally stepping into that role. The cross-border problem. Let's start with the problem XRP was built to solve. Moving money across borders today is still shockingly slow, expensive, and outdated. If you've ever tried sending money from Nigeria to the US, or from the UK to Asia, you know what I mean. Transfers can take 3 to 5 business days. Fees often eat up 5 to 10% of the transaction, and hidden costs like exchange rates can make it worse. Why? Because the system still relies on correspondent banks, a chain of intermediaries that pass the payment along step by step, each one taking a cut. This system, called SWIFT, has been around since the 1970s. It works, but it's slow, costly, and not designed for the digital age. Enter XRP. XRP's core utility. Unlike Bitcoin, which was created to be a decentralized currency, or Ethereum, which was built as a platform for smart contracts, XRP was engineered specifically for payments and liquidity. Here's what makes it unique. Speed. Transactions settle in 3 to 5 seconds. Cost. Fees are fractions of a cent. Scalability. The network can handle 500+ transactions per second, rivaling Visa. Neutrality. XRP isn't tied to any single government or central bank. Most importantly, XRP was designed to act as a bridge asset, a neutral currency that can instantly connect 2 different fiat currencies. Think of it like this. Today, if a US bank wants to send dollars to Japan, it needs a yen account or a banking partner in Japan. That's expensive and inefficient. With XRP, the bank can simply convert dollars XRP yen, all in seconds with minimal cost. This is what Ripple calls on-demand liquidity, ODL, and it's already being used by payment providers around the world. This isn't just a theory. In fact, Ripple has been building this quietly for years. In Asia-Pacific, Ripple's network is already being used for remittances between the Philippines, Japan, and Singapore. In Latin America, Ripple has partnered with Tranglo and other providers to speed up remittances into countries like Mexico. In the Middle East, Ripple has worked with institutions exploring faster cross-border payments in corridors traditionally dominated by SWIFT. And here's the kicker. The volumes are growing. In 2023, Ripple reported billions in ODL transactions. By 2025, with the lawsuit mostly resolved and US clarity improving, adoption is expected to surge. Why? Because now banks and fintechs can use XRP without fearing regulatory backlash. Today, a bank might say, sending dollars to India takes 3 days. With XRP, it becomes, send it now, settle in seconds. That's not a small upgrade, it's a paradigm shift. For years, XRP was dismissed as a banker's coin, or just another altcoin. Critics said Ripple's partnerships were hype, or that the SEC lawsuit would bury the project forever. But 2025 is different. With ETFs on the horizon, Ripple winning regulatory clarity, and Rust rolling out, the world is seeing XRP not as a speculative gamble, but as a serious piece of financial infrastructure. Even central banks are paying attention. Remember those pilots Ripple has with multiple central banks for CBDCs, central bank digital currencies? They're not using Bitcoin or Ethereum, they're using Ripple's tech. And while CBDCs themselves might run on private ledgers, the interoperability with XRP as a bridge asset is always in the background. Here's the bottom line. Bitcoin is a store of value. Ethereum is programmable money. XRP is a bridge for global value transfer. Each asset has its role, and XRP's role is about solving the $150 trillion global payments market. That's not a meme. That's not hype. That's real money moving around the world every single day. And in 2025, with ETFs, Rust, and a friendlier regulatory climate, XRP is closer than ever to fulfilling that vision. Which brings us to the big question. What does all this mean for XRP's price and market outlook? Because while utility is the foundation, at the end of the day, investors still want to know, where could XRP go from here? Price action and market outlook. Where does XRP go from here? When it comes to crypto, no matter how much utility or innovation a project has, the big question investors always ask is, what about the price? And XRP has one of the most controversial, emotional, and dramatic price histories in the entire digital asset space. From its meteoric rise in 2017 to its crushing bear markets, to being delisted during the SEC lawsuit, and now, standing on the brink of ETFs and global adoption, XRP's price story is nothing short of a roller coaster. To understand where XRP might go, we need to revisit its past. 2013 to 2016, XRP traded quietly under a penny, largely ignored by mainstream investors. 2017, XRP exploded from under 1 cent to over $3.84, briefly becoming the second largest cryptocurrency by market cap. 2018 to 2020, the bear market hit hard. XRP fell back under 20 cents, with critics calling it dead. 2020 to 2023, the SEC lawsuit froze XRP's momentum. U.S. exchanges delisted it, investors fled, and while the broader crypto market surged, XRP lagged. July 2023, a U.S. judge ruled XRP is not a security when sold on exchanges. The price spiked, XRP relisted, and optimism returned. 2024, XRP hovered between 45 to 70 cents for most of the year, consolidating as the Ripple lawsuit settled and Rust launched. Now in 2025, the stage is set for XRP's biggest potential breakout since 2017. As of August 2025, XRP trades around 65 to 75 cents, far below its 2018 all-time high but significantly stronger than its lawsuit lows. For many analysts, this price level is seen as suppressed, given Ripple's expanding partnerships, the launch of Rust stablecoin, the coming wave of crypto ETFs, including the XRP ETF filings in July 2025, renewed retail and institutional interest. In other words, XRP hasn't had its true post-lawsuit bull run yet. Technical analysis, key levels to watch. If you ask traders, they'll tell you XRP's chart is one of the most frustrating in crypto, but also one of the most explosive when it finally moves. Support zones, 55 cents and 45 cents are key downside levels. If XRP falls here, accumulation zones kick in. Resistance zones, $1 is the big psychological barrier, followed by $1.30 and $1.80. Macro target, if XRP breaks $2, analysts believe it could quickly revisit its 2017 high of $3.84. And here's the interesting part. XRP has one of the tightest supply dynamics in crypto. Unlike Bitcoin, with new coins mined daily, or Ethereum with constant staking emissions, XRP's supply is capped at 100 billion, with a large portion locked in Ripple's escrow. That means major adoption news can cause dramatic price spikes. The ETF factor. One of the most game-changing events for XRP's price is the potential approval of an XRP ETF in the US. Think about what happened with Bitcoin ETFs in January 2024. Within weeks, billions in inflows came from institutional investors. Bitcoin's price hit new highs, driven by fresh demand. Now apply that logic to XRP. For years, institutions avoided XRP because of the SEC lawsuit. With clarity, ETFs give them a regulated way to buy and hold XRP. Even a small allocation from Wall Street could dramatically move XRP's price, given its relatively low liquidity compared to Bitcoin. And here's where it gets interesting. Multiple ETF filings in July 2025, including proposals from BlackRock, Fidelity, and ARK Invest, specifically cite XRP's role in payments and its regulatory clarity. Translation: Wall Street is finally taking XRP seriously. Price predictions, expert outlooks. Here's what different camps are saying about XRP in 2025. Conservative analysts. XRP could range between $1 to $2 as adoption grows, but markets remain cautious. Bullish analysts. If ETFs are approved and Ripple continues winning adoption, XRP could break its all-time high and test $5 to $7. Super bulls. XRP army. Some believe XRP could one day reach double digits, $10 to $20, or even higher, citing its potential to capture a share of the $150 trillion global payments market. While the $100 to $500 price predictions are likely unrealistic in the near term, what's clear is that XRP's risk-to-reward ratio looks more compelling now than it has in years. The psychological factor. One of the biggest barriers for XRP isn't technical or regulatory, it's psychological. For many investors, XRP is the coin they gave up on years ago. It's the asset that was supposed to moon in 2018, but never did. It's the token that lagged while everything else pumped. But here's the twist. That skepticism might actually be XRP's biggest strength. Because when an asset with real utility and institutional backing finally breaks out of a long-term range, it doesn't just move a little, it explodes. Short-term, 2025 to 2026. Price could range between 70 cents to $2 until ETF decisions are finalized. If approved, XRP could see a sustained rally above $3 to $5. Medium-term, 2027 to 2030. With Rust adoption, CBDC integration, and more corridors using ODL, XRP could stabilize between $5 to $10. This would represent a mature valuation tied to global utility. Long-term, 2030 and beyond. If Ripple captures even a fraction of the global payments and remittance market, XRP's valuation could climb into the double digits or more. However, this assumes sustained adoption, regulatory support, and competition not eroding its lead. Challenges, risks, and the road ahead for XRP. No story about XRP would be complete without addressing the challenges it still faces. Because while the upside is massive, from ETFs to global adoption, XRP's journey has always been one of resistance, setbacks, and controversy. If history has taught us anything, it's that the path forward will not be smooth. So before we dream of $10 or $20 price targets, we need to face the reality. What could go wrong? Competition is fierce. XRP may have been one of the first crypto assets designed for payments, but it's no longer alone. Stablecoins like USDC and USDT dominate crypto payments today. CBDCs, central bank digital currencies, are being tested in over 100 countries, and many governments prefer state-controlled digital money over private solutions. Other cryptos like Stellar, XLM, Algorand, ALGO, and even Ethereum, ETH, are competing for the same financial corridors Ripple is targeting. The key question: can XRP maintain its competitive edge in speed, cost, and regulatory trust as this market evolves? Despite these challenges, XRP's future still looks brighter in 2025 than it has in nearly a decade. Here's why. The regulatory cloud is lifting, giving institutions confidence to engage. Ripple continues to expand its global reach, especially with the launch of Rust and ongoing CBDC pilots. Most importantly, XRP's core utility, fast, cheap, global settlement, is more relevant today than ever in a fractured, high-speed digital economy. If Ripple can navigate regulation, outpace competition, and prove adoption at scale, XRP could go from being the crypto that never pumped to the bridge asset of the new financial system. So the question becomes, will XRP finally fulfill its destiny after more than a decade of waiting, or will it remain a story of unrealized potential? The key takeaway: utility always wins. Speculation comes and goes, hype rises and falls, but assets that solve real problems tend to survive. And XRP's problem-solving ability, instant, low-cost settlement across borders, is more relevant now than it was when Ripple first launched. Does that mean XRP will hit $10, $20, or even higher? Nobody can say with certainty. What we do know is this: XRP is no longer just a token for crypto enthusiasts. It's becoming infrastructure for the next generation of global finance. But the road won't be easy. Regulatory battles, competition from stablecoins and CBDCs, and market cycles will continue to test XRP. The difference now is that XRP isn't fighting alone. It has institutions, banks, and a growing global community behind it. So maybe the real question isn't if XRP will break out, but when. And whether you're an investor, a builder, or just a curious observer, one thing's for sure: the coming months and years will be some of the most important in XRP's history. If you found this breakdown valuable, make sure to subscribe to the channel so you don't miss future updates. Especially as ETF approvals, Ripple's partnerships, and crypto regulations continue to unfold. Drop a comment below. Do you believe XRP will finally reach double digits in this cycle? Or do you think regulation and competition will keep it capped? Your perspective is what makes this community so strong. So let's get that conversation going. And of course, if you found this helpful, give the video a like. It really helps the channel grow and keeps us motivated to bring you the latest crypto insights with context that matters. Until next time, stay informed, stay patient, and stay ready. Because the future of money is being built right now, and XRP just might be at the center of it.